Without further ado, Mark would like to introduce our first speaker.
Yeah, sure. Thanks, Max. As Max said, we're doing gaming today. There's some names on here that I don't even know about. I don't think I really know anything about Embrace or Embrace, so I don't know how to even say that name, but I think it should be a good event. We've got some good speakers today, all covering different gaming topics. And our first speaker, I don't want to butcher the name. I'm going to guess it's Luis to give a overview of the gaming sector. Did I get that right? Hopefully.
Yeah, you're right. Sure. Should I just go ahead?
Yeah, feel free to give. Yeah, you're the first speaker. Feel free to start whenever you're ready, man. I think your mic's muted.
Luis, can you hear us?
Oh, he lagged out. He's a listener now.
Oh no.
So
I mean, I don't know.
Oh, he's back. He's back.
Okay.
Back. All right.
Perfect.
Go ahead.
Yeah, sorry. Can you hear me?
Yes, we can hear you.
Okay. Yeah. Thanks, Mark. No, you're right. I go by Luis Sanchez. Yeah, so thanks for organizing this, Max. And look forward to the conversation today. I think it's one of the most interesting industries to study. Just by way of background, I'm an investment advisor, and I am, just as a disclaimer, I am long many of the stocks that a lot of the other speakers will be talking about today, and some that I may mention. So, don't take this as financial advice. But I have some notes here, and I'm super long the sector, and I guess my area of specialization, my area of expertise is really in interactive entertainment, and video games being just one of the most interesting areas of video game of interactive entertainment for a lot of reasons that I could go into later. But I think I'll just start by laying out some of the big picture reasons why I like this sector, and then I'll probably also mention some of the things that I think are changing about the sector. So, a few weeks ago, I saw a tweet, and maybe it was a tweet, or maybe I just heard someone say it, but it kind of rang true to me. They said something along the lines of, if you played video games 25 years ago, you were considered a nerd. Today, if you don't play video games, you're considered a boomer. And I think that phrase kind of captures a really big part of the bull thesis with just the whole sector, which is that there's a huge demographic tailwind to video games. And I was looking at some of the stats this morning. If we're just focusing on Americans, 70% of Americans under the age of 18 are video game players. And I mean, that's huge. I mean, what else could you say 70% of Americans are the same thing of, right? And one of the biggest changes that stat captures is that it's starting to really cut across genders. It's no longer that boys play video games and girls don't. It's really everyone plays video games if you're young. And if you just look at like the full landscape of gamers in the US, about a quarter of all gamers are under the age of 18. The median gamer is in their 20s. And if you look at like the above 55 age group, less than 10% of video game players come from that above 55. So if we just roll forward a couple of decades, you're just going to see this huge demographic expansion, really explosion of the number of the population of video game players just in the US. And, that alone just kind of illustrates what some of the long-term growth drivers are here. And the other really important thing to know is, why do people play video games? Yeah, video games are entertaining, but it's not just a source of entertainment anymore. Video games are really social networks too. It's where people hang out with their friends when they're not physically with them. And I think that's a really important thing to understand about the way that video games have developed. Outside of the US, video games are also going through, an interesting renaissance or maybe inception, just given that the smartphone is the video game console of choice and the entertainment device of choice outside the US. So now billions of people never otherwise afforded an Xbox, 15 years ago, video games. And it was pointed out to me that an iPhone today is roughly equivalent to the power of an Xbox 360. So, mobile phones are just really powerful video game devices. And now with edge computing and cloud gaming, really starting to take shape, access to the best AAA titles, which are currently not very accessible on mobile, are soon going to be democratized globally. And I think that's a really interesting and important thing to understand. I think a lot of people are very bearish or, skeptical on the adoption of like cloud gaming and AAA titles to mobile. But I think that if you really do your research, you'll find that there's maybe reasons to actually be a lot more optimistic than people would otherwise think. So, the bottom line is that the video game industry is a massive global industry and it's growing at a double-digit rate. I was looking at a report by Newzoo, which is one of the most reputable data providers in the industry. They're projecting 2021 the video game industry globally to be about 180 billion and to exceed 200 billion by 2023. They're counting about 3 billion players, or they expect to see about 3 billion players this year. And if you break apart what the market is, what that, roughly nearly $200 billion market is, roughly half of it is mobile. About a quarter of it is console, and the other quarter roughly is PC. Those are very rough numbers. I think console is actually a little bit bigger than PC. And actually, mobile is growing the fastest of all the segments. And according to this Newzoo report, 2021 is going to be the first year where mobile is actually greater than half of total video game industry revenue. So let me just contextualize that actually a little bit, because I think this is really interesting too. I saw a stat, I think it was in the App 11 S1, where they said 14% of iOS apps are video games, but video games account for 70% of iOS money spent. So just think about that for a second. 14% of apps, but 70% of all mobile dollars spent are video games on iOS. And I don't think the Android numbers are probably very different, right? And if you think about where these video game companies are marketing, they're spending a lot of money on Facebook ads, they're spending a lot of money on Google ads. If you look at like the most productive ad networks for acquiring customers, Facebook and Google are really high up there. I think Unity is pretty high up there too, and there's some other ones. But this is all to say that if you own Apple, Google, or Facebook, you're massively long the video game industry, even if you didn't know that, because, video games are a huge part of iOS and Android revenue and are a huge part of Facebook advertising revenue. So another interesting thing is what happened with COVID. The video game industry just exploded in 2020. And I think there's a little bit of a bull bear debate over whether or not this is just like a temporary increase or whether or not this is an acceleration of a longer term trend. I personally believe it's an acceleration of a longer term trend. And if you just look at the last 4 quarters of earnings from the major publishers, yeah, they all got a really huge bump last year during Q2 and Q3, but growth has pretty much sustained in Q3 and Q4. It has not fallen off a cliff for most of the big publishers. You know, some publishers have had more uneven results than others, and it has fluctuated a little bit depending on, you know, when certain games were released. But I think the data more or less supports the idea that the impact of COVID was more of an acceleration than a temporary boost. The other big thing that happened last year was that we got a new generation of consoles, so hardware. Microsoft released the Xbox Series X, and PlayStation released the PS5. And you know, just given the chip shortage and given certain supply chain factors, like these consoles have essentially been sold out for 6 months. And you know, this is definitely a case where there's a lot of pent up demand, and this pent up demand is certainly, it's going to result in a lot of money being spent on the hardware and also on the software, you know, this year and next year, when that pent up demand can be met with the hardware and also the software that is going to be tailored to the next generation consoles, which, you know, the developers have been working on these new games specifically for the Xbox Series X and the PS5 for years now. You know, I'll give a shout out to the Nintendo Switch, which has actually sold really well during the last year. But as I think about where we're heading with the hardware, I think it's pretty clear that the next generation of consoles, or, you know, within, like, I would say like the next 10 years, consoles are really moving towards more being mobile and cloud based. So this is where I think that it's really important to understand what cloud gaming means. And Newzoo actually expects cloud gaming revenue to exceed $1 billion this year. So cloud gaming is already here. You know, we have the Amazon Luna, we have Google Stadia. It's already here, and the technology works. It's just a matter of getting internet access to the level it needs to be. And you know, so what I think some of the implications of cloud gaming could be is, you know, Microsoft Xbox really transforming from a hardware platform to becoming more of a subscription platform like Netflix. And you know, you could almost think of it as like, in the future, you'll subscribe to Xbox or you'll subscribe to PlayStation, and the hardware won't be the differentiating factor. It'll just be, you know, which has exclusive content and which has the more interesting features. Really not unlike how, you know, you may subscribe to Netflix or Hulu or HBO Max, depending on which shows or movies you want to see. So I'll get more into, I'm going to speak to some of the ways that I think the industry is changing right now. I think a really big one is that the line is blurring between video games being a gaming platform and being entertainment services and social networks. So this is where you start to hear people talk about this concept of the metaverse, where, you know, people log on to Fortnite because they could see a Travis Scott concert and hang out with their friends. You know, but you've seen a lot of these really interesting crossovers between video games and entertainment. So Ready Player 2 launched a really interesting experience in Roblox to launch their new book. A lot of marriages and graduation ceremonies last year took place on Animal Crossing. If you know, there's a lot of these social spaces that have been developed in VR. So like Rec Room has been a really interesting one, or Alt Spaces, which is a social space created by Microsoft in VR. And then of course we have esports and streaming, and you know, that just kind of gets into more of like how this industry has a lot of different facets to it. There's streaming is just as much about being entertained by the streamer as it is about watching the actual game being played. And that also leads into when there are these esports events, you know, being broadcast to very large audiences. And there's also in-person events, which obviously COVID, but we'll think it was the League of Legends final a couple of years ago that filled up. On the actual business of making the video game, there are significant changes to the video game business model. The one that I think is most important to call for PC and console is this trend of live services. So a game is no longer this prepackaged product that's sold once and consumed in a finite way. Developers now, just because of the way the internet is connected to consoles and devices, developers are now releasing content on a regular basis. And actually, I'm not really referring to like how Grand Theft Auto releases a new expansion every year. I'm really referring more to like the Call of Duty model, which has been a really incredibly pioneered by Activision, which is where they launch new content daily, weekly, and monthly. And the fact that they're launching new content, they're looking at a live service, it's in the name, it's live. The product managers of Call of Duty are looking at the data every single day, and they're trying to figure out which dials they could turn to maximize engagement and maximize revenue for their game. It's a very interesting new model that certain publishers have figured out, and certain publishers haven't yet figured out, and actually could, in my opinion, be very significantly competitively disadvantaged if they don't figure out how to modernize their business model. I think we've seen EA also do a really good job with FIFA, and there's a ton of other examples out there. But this idea of live services, I think, is actually becoming a very big differentiating factors between studios who are very capable at managing a video game with this and those who are not. So this actually gets to the point where it used to be that the number of titles that a video game company released every year was the biggest determinant of their financial success. But now it's really becoming the case where the quality of the titles that a video game company releases is way more important, right? So this is why Activision can get away with releasing Call of Duty, just relying so heavily on Call of Duty and it being so massively successful. Whereas, a studio like, well, I won't name names, but there's certain studios that release an order of magnitude greater number of titles than Activision every year and can't even a fraction of the revenue that a single title that Activision releases each year. Over time, that trend's actually gonna just increase. Another big change is IDFA, right? Which is like the Apple's ATT, how they're changing the way that targeting happens in app. So given that mobile is now the largest segment of the video game industry, and the mobile video game companies operate under a completely different model, where they're really more on acquire customers using various levers to targeted advertising and other forms of branding and marketing to acquire customers, retain those customers, and then monetize those customers. So all three of those things are actually made slightly more difficult in an environment where targeted advertising and data sharing is limited. So we're actually seeing this right now, where certain mobile publishers who have differentiated capabilities in terms of leveraging their first-party data to acquire and retain customers actually have a significant competitive advantage. So we just saw Zynga acquire Chartboost recently, or they announced they're acquiring Chartboost. And that has really interesting implications because essentially Zynga is becoming an advertising network. And by becoming an advertising network, they think that they're going to be able to acquire customers more efficiently and effectively than, let's say, an EA, which just acquired Glue, but EA does not have the same advertising network capabilities. However, they may decide that in order to be viable in this industry, you may see all mobile publishers either choose to sell themselves to companies that do have these differentiated abilities, or acquire these abilities themselves. So you may see more game makers acquire advertising networks. And then the other, notable one, there's App11,
Hey,
which
Luis, really quick,
is
I'm sorry.
basically
I just want to make sure that we are sticking with our time slots as well.
okay.
So
I
we'll
just have
just
two more
respect
bullets.
everyone's time. Okay. So let's give it to the closing remarks if you can, please.
Yeah. Okay. So yeah, IDFA I think is big, and I think, and the last thing I was going to say is consolidation. So I think barriers to entry go up. I think barriers to success are also going up, and I think we're going to see a lot more consolidation. And just the last point I'll make is that Activision's a huge company. It's only 4%. It only has 4% market share of the overall video game industry. So that should just give you an idea of how fragmented and how large this industry is. Okay, that's it.
Awesome. Thank you so much. Yeah, I definitely can tell that the gaming industry is getting more and more popular. And I think I read an article that the video game business is now actually larger than both the movie and music industries combined. So I'm really interested to see how it's all going to play out. Luis, thank you so much for going over the industry overall. And I think we're
Max
ready.
Put out there. Luis, really quick, one question. Since you have such a broad overview of the industry, what is your favorite stock in the industry?
Really tough question. I'm I'll just say safely that I'm long multiple of the stocks that other speakers will present, but I'm really bullish on Activision.
Cool, thank you. Can you guys hear me? Keep saying them.
Yes.
Okay, cool. So moving on, I don't know if Max lost his voice or not, but I think we have Yield Fanatic, who's going to be talking about skills. Obviously, this is a very touchy subject for some people in FinTwit. Some people love the stock, other people do not. So kind of curious to hear a bull's perspective here. And I know I've seen a ton of arguing back and forth, and curious to see what Yield has to say. So thanks a lot, man.
Thanks very much, May. I mean, that was a very good introduction to this thing. Anyway, so first of all, let me just start by thanking you and Max for organizing this and having me on here. This is the first time I'm speaking on Twitter Spaces. So just by way of introduction, my expertise is in corporate finance advisory, and I've been working across hedge funds as well over the last 12 years or so. I am a fundamental focused investor, but with specialization in distressed and event-driven trades. So when I look at investments, I often look at the catalyst for trade realization. Now, to get into the details of why I'm here, which is to talk about skills, there's a lot to cover, so I'll try and go through the business reasonably quick within the time slot if possible. So let me start off by saying that a lot of folks on FinTwit consider me one of the biggest bulls of skills, possibly because of an ultra long thread that I put out a few weeks ago. But do note that I am mostly an event-driven investor, which means I invest based on what I feel are upcoming catalysts on a stock. This is sort of what I do in my day job, and I mostly apply these principles in my personal portfolio. Generally, most of my investments have a key valuation or relative value thesis, which sits well alongside the growth potential of a stock. Skills, however, is not one of those. If someone tells me that skills looks expensive on today's metrics, and I stress today's metrics here, I would tend to agree that it is. In that sense, it is a black sheep in my portfolio. That said, I honestly feel that this is not an investment that one should judge by valuation alone, as the amount of hidden optionality is often unaccounted for. I like these sorts of investments, which I call misunderstood opportunities. Let me start by saying that I consider Skills a high-risk investment. This is a company that came to the markets via the SPAC route, but given its stage of life, should have really gone down the late-stage VC or even the early-stage private equity route. The failure of the public markets to understand the life stage of this business is what is actually working against it now. In other words, it's an early life, high-risk company. So what is Skills? Skills is often misunderstood for a gaming company, but it really isn't one, even though it operates in the gaming vertical at present. It is effectively a tech stack or an SDK, which stands for Software Development Kit, which induces a competition angle onto an existing vertical. But Skills is not just about the tech. It's more so about the platform that it operates, where this tech features as a foundation. As a result, it has platform-like characteristics in terms of having and operating the base where sellers and buyers meet. And Skills has proven the business model of this platform by using gaming as a vertical. Today, it only operates in the gaming vertical, but I expect this to change in the future. For now, it's best to explain how the company works using the gaming vertical itself. So how does this platform work? The seller here in the platform are game developers. One thing to note here, the developers who come on Skills are currently not, and to be honest, I don't think they'll ever be the big developers that we know, like in Activision. It's going to be mostly small-time developers who often do not have either the capability or a large enough budget to spend on game monetization. So the selling point for Skills is really small-time developers should focus on game development, while Skills takes care of the front end, which includes incurring marketing spend and monetizing the game, from which it takes a revenue share. How does this work? I'll just give you an example. Let's say we have a game where each competing party puts in $1 each. So that's $2 in total from both parties. And the winner takes home, let's say, $1.40. The remaining 60 cents is split mostly equally between Skills and the developer in question. This is all the fee that they get from the developer. The whole revenue model for Skills is fully variable with no fixed component at all. So incentives between Skills and the developer to its platform, which here in the gaming vertical means that they need to attract paying players to ensure the success of the game. As a result, they need to spend their marketing dollars very carefully. A lot of it really comes down to capital apportionment. So Skills has limited dollars to spend, and they have to choose which games to market and which games to make a success of. And that decision is driven by data. As a result, Skills test every new game that is brought onto the platform, and if they feel that that game can be a success, and it doesn't have to be a blockbuster here, if that game can just be a commercial success, they will apportion marketing dollars to it. The issue with this approach, though, is that you will get some games doing much, much better than others, which ends up being the focus of the marketing spend, which means that you end up with revenue concentration from a selection of games. Is that bad? Well, there is certainly an element of risk to it, and let's not shy away from that. The belief then really comes down to the effectiveness of management to spot trends and be responsible with capital apportionment. It's tricky, but that's effectively a part of the investment thesis here. This now brings me to the next point, which is buyers in the platform, or in other words, the players here. For this, I ask you to think about a casino, as the dynamics are interestingly quite similar. Only a portion of the people who visit casinos end up betting or staying. The aim of the casino is to bring you in and ideally convert a regular. The casino's business is built on the paying regulars, not the visiting one-time tourists. And the casinos do so by offering, say, free drinks to those tourists who show promise of being a regular, a type of marketing spend. As again, the aim is to grow the pool of paying regulars. Now, casinos have high churn on total visitor numbers, which includes both paying regulars and tourists. But that's because we are looking at total visitor numbers, not the paying regulars itself. Think about it. Let's say in March of 2021, we had 5 million total visitors, which was, let's say, split 2 million paying regulars and 3 million tourists. The casino, let's say, was able to convert 1 million of these 3 million tourists into paying regulars. So now your paying regular pool has effectively increased by 50% from 2 million to 3 million, and this effectively flows into your revenue. But if you look at churn on total visitor numbers, we see that 2 million tourists out of 5 million visitors didn't come back, which translates into roughly a churn of 40%, which sounds very, very high. Now, this dynamic is actually quite similar for Skills, where the retention on MAU or monthly active users looks very low because we're looking at total visitors, not paying regulars. So consider paying MAUs up as paying regulars in Skills and total MAUs as visiting numbers akin to a casino, and the situation is then really self-explanatory. To me, Skills benefited heavily last year from COVID when people spent a lot more time at home. Skills plowed a lot of cash on the marketing budget, especially on user acquisitions to grow their MAU and paying MAUs. As a result, we saw the MAU number increasing significantly by around 35% from 2 million in FY19 to a peak of 2.7 million in Q320. This then rebased downwards to 2.4 million in Q4. And there's possibly a direct correlation between the loss in MAU to the relaxing of lockdown measures in the US last year, given this is mostly an American business. In other words, the COVID rebasing has already happened for Skills. But over the course of the last year, they were able to grow their paying MAU base by 120%, which also contributed to a 92% growth in revenue. Interestingly, in Q1 21, the MAU figure grew back to the all-time peak of 2.7 million. So it seems that they're continuing to grow it on a quarterly basis. We should be looking at quarterly growth in MAU here and not the annual figure. Now, part of the users that have been attracted have been converted into payers. The aim is to get these payers to continue contributing into revenue into the future. So my argument here is that we shouldn't judge the effectiveness of user acquisition spend on an annual or even a quarterly basis. At some point, when the sales and marketing spend normalizes, we will see the benefit of the spend accruing onto free cash flow for years to come. The company notes that the lifetime value of customers acquired divided by the customer acquisition spend, or the LTV to CAC multiple, is around 3.8 times. Now, if true, that is a very high multiple. And given my work into this company, I'm minded to believe that that figure is at least partially true. That is the main argument on the existing business here, ignoring what the platform could grow into, but we'll discuss that shortly. Now, the key bear argument is that the sales and marketing spend is higher than revenue in any given quarter or year. This is true, but I urge you to look at the split of the marketing spend, which is split across user acquisition costs and engagement spend. Engagement spend is the equivalent of the drinks that Mr. Casino buys to convert a tourist to a regular payer. For skills, this involves promoting other games to existing payers, paying cash prizes to tournament winners, or even incentives offered to entice those payers who haven't made a deposit recently, which is actually a very small part of it. This spend is optimized to ensure that the right games are being promoted and that the right payers are being targeted. The bigger issue highlighted by bears, I suppose, is really to do with the user acquisition cost, which has ballooned over the last year. This ballooning spend is what has resulted in total marketing spend increasing above revenue in any given year, as a company tries to front load user acquisition given the recent access to capital. I believe that given the effectiveness of spend, we will see the benefit of this user growth in quarters and years to come. But I guess for now, what the market really wants to see is the spend being reduced. And I believe that we will see that in the following quarters. Remember that this was a darling stock until around mid-February or midway through Q1 when the short report came about and the stock started retreating. The weak market sentiment on growth stock at that time didn't really help either. At the same time, the company's decision to issue stock, presumably something it had been working on when the stock was around the mid to high 30s, and the executives' decision to sell part of their holdings. Now the CEO and the CRO only sold 10% of their stock, so not really heading for the exit, especially considering that most of the CEOs in the stock. But the fact that the executives were released from a 24-month lockup, which was heavily marketed at the time of the SPAC, it didn't help. This is something that, to be honest with you, really annoyed me as well. I was hoping to get more clarity on this, but unfortunately, this is not discussed in the conference call that just passed. But I believe that there is more to the story than just heading for the exit. As we saw, Q1 results were quite stellar and the guidance was raised. But to be honest with you, it is what it is, and I doubt we'll get any more clarity on that. Anyway, going back to this being a darling stock until mid Q1, that means that executives were not really aware of the market's issue with the high S&M spend, but now they are. While this sort of an issue is very annoying for an exec team that is focused on growth, being a public company means having to balance the need for investment in growth against the share price performance. Those who believe that executives shouldn't care about share price performance are, to be honest with you, having a laugh. I can tell you from my corporate finance days that all executives care about share price performance. It's not just about their own paychecks or jobs, but it's also about ensuring that your investor base, especially the large institutions, are happy. So balance is required. I believe that they will reduce the marketing spend now that they know that the market is not happy with it, as alluded to in the Q1 call, over the next few quarters. So to basically show that the business is sustainable and that it can grow. This is, I believe, one of the catalysts to my event-driven trade. The other catalysts here are firstly expansion into synchronous gaming, which funnily enough was discussed in Q1. Remember that solitaire or blackout bingo are not really meant to be competitive games, but they have made a success of those sort of games anyway. The next bit of growth will come from new genres, especially those which are fun to play and which have a competitive angle. And the company mentioned first-party shooters and strategy games in particular. Remember that one success is all that is required to get a huge boost in both MAU and paying MAU here. Secondly, Skills is sitting on around 620 million of cash, and I don't believe they will need more than 150 million per year. So I believe there's an acquisition coming. Thirdly, look at the heavyweights backing this business in terms of prior investors and current board members. One of these investors, the NFL, is already partnering with Skills through a licensing agreement, the benefit of which will flow through from the end of this year possibly. Just imagine having access to a potential MAU pool of NFL followers. That's a huge pool to grow into. Expect other brand partnerships to be announced this year as well, starting possibly with the Major League Soccer. And finally, expansion into non-gaming verticals. The company mentioned exercise and education as possible verticals. Moving into non-gaming vertical will stop certain market participants from comparing skills to other gaming publishers. So it's a win-win situation, really. This, I believe, is the biggest catalyst for stock repricing here. To summarize, there are many catalysts for skills, which I hope I have given you some sort of color on. Yes, it does look expensive based on metrics today, especially when you compare it to other gaming publishers, which isn't the right comparison in my view. While at the same time, skills still needs to prove itself as being a platform than a gaming company, and perhaps the diversification into non-gaming vertical will help. Again, this is certainly not an easy trade, but one that is exciting for sure and topical, and one that offers a lot of potential in my view. So that's really it from me. I hope you guys found it interesting. Thank you guys for your time. And now over to you, Mark and Max.
Yeah, absolutely. Can you guys hear me? I want to make sure that I don't have any problems with mic.
You're good.
Yeah,
okay,
can
perfect.
hear you.
So just in case you guys can hear me or we have some problems like people leaving all of a sudden, just wait for like 30 seconds and I'm going to restart another spaces and we can share the link. You just never know what's going to happen. So thank you so much, Yield, for covering skills. I personally been invested in skills for quite some time, and it was very interesting to hear your take. There is definitely a lot to look forward to when it comes to this company. I love the fact that they never factor in all of the potential revenues from this company in the future. So in a failed partnership, there's a lot of things to look forward to. So thank you so much for participating, and I hope we'll do more joint projects in the future.
Yeah,
sounds good. Thanks for having me.
Thanks, Yield. I think you did a great job. One of the craziest stocks this year in terms of how fast it went up and then how fast it went down. I mean, it was just parable. Still.
It's around 10% of my holding now. Let me just take that. Actually, I mean, see, I started investing in this when this was peak, just before the merger went through. I thought it was quite interesting looking at the company, and hats off to the guys at pounding the table. And I know Anthony's on here for actually pointing that out to me. I felt that it was a great investment at that point in time. Bought options, made some money. And, you know, when I looked at this company, it just was quite obvious that it's not going to be an easy one to sell.
Mm-hmm.
And that's why I moved from options to stock. I have held this since it was 20s originally. When it went to 40s, to be honest with you, I thought it was a bit of an overreaction, and it retraced back nicely. And I topped up at that point, which was 20 again. Mm-hmm. So my average in the stock is around 21 at the moment. And yes, I mean, when I put out that long thread a few weeks ago, that's when I topped up and increased it to 10% of my holding. So it is a long one for me.
Thank you. Appreciate that. All right, moving on.
No problem.
Mark, are you here?
Is my mic working or no?
It's working now, yes.
Yeah, hi. Can you hear me?
Yes,
awesome.
We can hear you.
Yep, I think we have Roblox, yeah.
All right, so I'll start first by generally explaining Roblox, then jumping to some key points from their earnings report, and we'll continue from there. So Roblox it's not as pixelated as Minecraft, for example, but it's not as high end as a game like GTA. So I tested out the game myself past week, and it's really not for me. Maybe I'm too old, but my first impression was, hey, this really looks like an app store filled with games, because there's so many games, and it really feels like an app store, but just the app store with games. So also, by the way, the game isn't new. It released actually in 2006, but it's obviously gained popularity in the last couple of years. So I tried out a couple of games, and I directly understood why this company is becoming bigger and bigger, and why it's becoming super popular right now. So you have so many games, some very, very good ones and some very, very ridiculous ones. But the ridiculous ones are getting super popular and very well monetized. I'll take an example of a whack-a-mole game, for example. It's really just a whack-a-mole game where you go and you whack-a-mole. But the game is super well monetized because it's basically pay to win. If you want a larger hammer and get more points, you can buy a hammer, other cosmetics, extra boost, etc. So in big, the developer really chooses if his game is going to be super well monetized. Obviously, most of the games are free to play, and then he can add skin, cosmetics, and whatnot. Also, the most important point of the whole Roblox game and ecosystem is it's very social. You can talk with anyone inside the game, you can help each other, complete missions, etc. Obviously, there is a toxic side to it, but usually both. That's the yin yang of the gaming world. Overall, I can see why this is just this huge game company right now. Now I'll jump really quick in some earnings numbers. So reported a loss per share of 46 cents, had revenues of $387 million, up 140% year over year. The company's net loss for the quarter was $134.2 million. In the first quarter, daily active users actually rose to 42.1 million, up 79% from last year. The users spent 9.6 billion hours on the platform, up 98% year over year. Now there is actually very interesting number here. 87% growth in daily active users outside of the United States and Canada, and 111% growth of daily active users over the age of 13, because that's one of the main bear aspects. Actually, everybody says, oh, but Roblox is just little kids under the age of 12, 13. Actually, right now, during the earnings call, they actually reaffirmed that right now they think that there are actually more users over the age of 13 than under the age of 13. So nice on that. They also said that the quality of the content has been moving right direction to cater to an older audience as well. $652.3 million in bookings, up 161% year over year. Bookings is really the main number everyone should really look, and not really revenue. You can look at both, but bookings really shows the bigger picture. So on quarterly basis, the average booking per daily active user was $15.48, up 46% year over year. Now, why is this so important? Well, because most of the content on the platform is free. So as an investor, you have to pay attention to how Roblox monetizes its users. So the more the company can grow its average bookings per daily active users, the better the company's performance. Now, to end this little recap of the earnings, Roblox right now has a price to sales ratio of, I think, 31. So pretty high compared to a company like EA, for example, who has a PS of 7, and Nintendo of even lower of 4. So earnings in my eyes were pretty good. Now I'll move into the direction of how the company makes money, the developers, China, and then obviously the secret world, the metaverse. So Roblox is an in-game currency called Robux, just like V-Bucks is the in-game currency for Fortnite. You can buy a Robux, as many parents in this space know probably. That's where most of their money has been going this past year, I think. So you can buy Robux as you play through Roblox Premium, which is basically the subscription where you can pay $5, $10, or $20 per month, which I think equals to approximately 1 cent for every Robux. You also get some premium access to games, some premium stuff in games, extras, etc. So not just the currency, you get some stuff on the site as well. Money through the games that they make. They choose how they want to monetize this. Now the fees are higher than on Unity and Unreal, but it's worth for them to be on a platform like Roblox because of a couple of points, which I will mention right now. So first up, it's pretty easy to code compared to these two. Pretty easy to code, and Roblox really manages most of the things at the back end. So if you have the basic skills to become a gaming creator, a game creator, Roblox is probably a good platform for you. They have integrated monetization and payment solutions, so they help with the monetization as well. And for me, the biggest is they have a super large user base and pretty addicted to the platform. And since it's a type of social platform as well, your game can go viral pretty fast, and then it just sticks there and you'll be successful. Now, the DevEx fees rose, developers exchange fees rose from 45 million to 119 million this year. These fees have averaged about 18% of bookings in the last several quarters. Now, you can look at it as you want, but I look at it as successful as the games get. Obviously, more payouts will be made, which is a win-win for both the company and the developers. Now, I want to show a little of an example of how a streamer can actually become a developer and then maybe leverage their fame as a streamer and make their game become even more popular. So there is a YouTuber called Megan Plays. She has 3.6 million subscribers on YouTube, much more than me, by the way. She has more than 1 million followers on Roblox. Now, she decided to create her own game with the help of a studio called Wonderworks. The game is called Overlook Bay. It was the first release of a studio. It was launched in beta mode on July 27th, 2020, grossing over, drumroll please, $1.9 million in revenue in just 4 months. So imagine lots of streamers start creating their own games on Roblox. Streamers with 3.6 million subscribers on YouTube or on Twitch or whatever have a huge following. Not only is it going to help the streamer, it's going to make Roblox a lot of money, it's going to make the developers a lot of money, so it's really a domino effect in a positive way. Now, I'm going to go into my last 2 points. First up is Roblox China. China, first up for gaming, is always an obstacle because, well, Chinese regulators prohibit youngsters from being addicted to games, but coding platforms with gaming features may be an exception, and this is where Roblox China comes in, obviously in partnership with Tencent, because, well, Tencent partly owns everything. So the Chinese version of Roblox added an edu, so edu, in front of the URL and calls itself Roblox Education to further strengthen its presence as an educational platform. Now, there is something called K20 STEM there, STEM being science, technology, engineering, and math. So Stephen Ma, the senior vice president of Tencent, is expecting the program, which is a non-profit driven, to draw some between 40 to 50 million users as part of the effort to advance science, technology, and innovation capabilities of Chinese national. Now, imagine just half of those users go on the China Roblox platform. That's more than 50% what Roblox has today. So it's a pretty big deal right now for Roblox to have a presence in China. They are licensed there. It's live. They actually said during the call that developers in China are breaking actually into the top 250 in the world market. And developers outside of China are also gaining popularity inside of China. So China, Roblox, still in the early days, but they believe, I believe as well, that it's going to be a huge, huge market for them. And it's China, Asia, if you've been there, is a huge market for gaming. Everyone is a gamer there. It's insane. I've been on trains there in Japan. Everyone's playing game on their mobile phone. Pretty big market. Now, the last thing I want to mention is the metaverse. You're going to hear these words a lot in the next coming years because, well, it really is the next thing. So for Roblox, one of the key points as well in the metaverse is having an identity. And that's also one of the major focus for Roblox and its users. So about 3.5 years ago, the split between the Roblox spent in experience versus on in catalog in Roblox itself was 80% for the experiences and 20% for the in catalog. Now the experience are getting 70% and the catalog are getting 30%. Why is this such a big deal? Well, because if you're going to spend hours and hours in the virtual world, you might as well look good because the catalog is where you can configure the way you look in the virtual world. In Roblox, You can buy skins, you can change your hair, whatever. There's lots of possibilities there. Now, it doesn't stop there. They also had a couple of immersive experiences, such as the Lil Nas concert, Ava Max, and the One World event to support frontline workers. So you basically jumped into your Roblox game, and you basically had live concerts. There was Jimmy Kimmel, Jimmy Fallon, all those funny guys. You had Lady Gaga singing. So it's basically just like going to a concert today, but you just don't have to leave your house. It's all virtually being done, but you can actually see them live. The same thing has been done in Fortnite a couple of times. I remember 2 years ago, you got an exclusive trailer for Star Wars in Fortnite. Was pretty entertaining, pretty well done. This new Star Wars movie got lots of popularity. Fortnite obviously gained that as well. Now, going back to the earnings call, from what I've heard, there are many more experiences coming to Roblox, not just concerts, but brands creating games on Roblox. Their main goal is for a huge publisher game, maybe an Activision or an EA or whatnot, to create a game, not just to create an extra game that already exists right now, but to create a game specifically for Roblox. I think that could be a huge milestone for Roblox. But there is a game, for example, Hot Wheels, the brand created a game on Roblox to get more exposure to the younger generation. And through that, obviously, when a kid goes to a toy store, they might buy some Hot Wheels toys right there. Now, there are also branded skins in the game, whether it's partnerships with Nike, Adidas, or maybe a partnership with NFL, soccer player, whatnot. You can buy their skin in the game, support your favorite football team. They obviously make money from that. You're happy because, well, you support your inside the game. And then lastly, obviously, advertisement in general. I think advertisement in the virtual world, Unity is going to gain from that, especially, is going to be saying each and every game has endless space to put advertisement, whether, let's say, for example, you're in GTA, you're driving down Los Santos, you have some billboards there. Those billboards can actually be monetized with real life money. And this is actually, I think, going to happen in the future, especially in Roblox. If they want to create this real metaverse, I think they can do it because they have so much creativity going on there, so much space, so much opportunity. Advertisement is going to be a huge part of the virtual world, of the gaming experience. I'm sure Facebook, Horizon, Mark Zuckerberg is thinking about that as well. So also, full disclaimer, I do not hold any Roblox shares as of today. I'd love to add, but I will need some rearrangement in my portfolio. I do have Unity and Activision in my portfolio. And yeah, if you're not following me on Twitter, if you like what I did, maybe hit the follow. Also have a YouTube channel called Couch Investor. If you want, you can check that out. And yeah, that's about it. Thanks for having me, guys.
Yeah, absolutely, Couch. Thank you so much. That was a great presentation. I personally don't have any shares of Roblox, but after listening to your presentation, I think that I definitely need to do a deep dive into this company. Sounds very, very interesting. Thank you so much for participating. I really appreciate it. And it's always a pleasure to have you on all of our events. So much value.
Max.
Thanks, man. Yeah, and really quick, just wanted to say thank you so much for all of the 250 listeners that we have right now. We are 3 speakers in, and we have 7 amazing speakers left to cover 7 different companies, which I'm really looking forward to. So if you guys can share the link to the spaces so we can get as many people as possible. There is so much value being brought by every single speaker that I feel better for not sharing this link with all of the FinTwit community right now. So Mark would like to introduce our next speaker.
Couch, I'm curious, why aren't you long Roblox? You seem like you did a pretty good pitch there.
Yes, I know. Because I've been wanting to buy in the low 60s, and then I added to my other positions, a bit short on cash. Then I opened a position in Facebook because, well, I don't know, I can't bet against Mark and the virtual world. But Roblox is for sure one of the next stocks, along with PayPal, to add to my portfolio. But I will need to get rid of something else right now because it's pretty populated.
Oh, okay. Thanks, man. Good job. That was
Thanks for having me.
Mark,
also,
Max.
last thing, I did a podcast with Wolf Financial about the gaming industry as well. So shout out to him. If you don't follow this guy, I don't know what you're doing.
Hey guys, I only got 5 minutes, so if I can go.
Sorry to.
Yeah, go for it.
All right, guys. I'm talking about Nintendo. So to give an overview, I'll probably hit just the valuation numbers because that's one of the most important parts of this company. So just to give a quick context, market cap $73.7 billion. But if you X out the $16 billion in cash, their huge stake in the Pokemon company, and their $1 billion stake in Niantic, and then a few other things, the enterprise value actually comes down to $46 billion, and that gives them an EV to operating profit of 7.8. Now, why do I say this first? That's because the operating profit multiple is so low. So the first thing you kind of look at with this company is, all right, why is it trading at such a low multiple? And it's because investors don't believe, in the staying power of the Switch console system that they have, and this is their newest hardware that they have. And history would really prove that not to be correct. So the Wii, which is what they had in about the 2010 period, we all remember that console. They had this novel product, the motion sensors. Everyone tried to copy them, but with that console, every other aspect of it was really horrible. So a lot of people are kind of equating that to the Switch. They think it's kind of a gimmick. I mean, the Wii was really a gimmick that kind of just went through. Everyone played a few games, and then it kind of fell off, and it kind of just sat in the corner. But really, the pitch with Nintendo, and I'll try to make this quick, is that the differences are between the Wii and the Switch. The Switch has an account linked to Nintendo, so it's really easy to roll over people to the new generation. And the Switch has acceptable graphics. The Wii graphics were absolutely terrible. They're not as good as the PlayStation or Xbox, but they're acceptable. And the Switch gets a more diverse use, so a lot of popular third-party games get played on it a lot, including Fortnite and Apex Legends, among a lot others. And then the Switch actually has an online subscription service. I forget the numbers. I think it's like 30 million, but that gives you access to a lot of Nintendo's historical games. So the major bull thesis with Nintendo is really just sustainable profits. And it's really just sustainable software profits, which comes from games. And the reason I think that they can achieve that is because the Switch has the potential to be a long-standing gaming hardware platform like the PlayStation, Xbox, and it's not going to be a gimmick like the Wii and then the Wii U that followed it up. So consistent game sales can come from, Nintendo first-party products and third-party games. And there's also a rising percent of digital downloads. Nintendo is only at, I don't have the numbers in front of me, but like 45% digital downloads, which once they get it up to the industry levels of about 80%, that will increase their margins substantially. And they're also going to be able to roll over Nintendo accounts to second-gen systems. And one of the big keys is, profits don't necessarily need to go up here because everyone's betting with the valuation so low that they're going to actually go down. So you really just need them to stay consistent over the next few years and beyond. And then on top of this, there's other parts of the bull case, including 4 Super Nintendo Worlds, which are small theme parks they're making in conjunction with Universal. They're also making animated TV and movies in conjunction with Illumination Studios. There's a Mario movie coming in 2022. And then they've renewed their partnership with Niantic to kind of save their mobile strategy, which has been lacking really, really terribly. And they just had an announcement with them. It's really early days with that, but there's a lot of potential to work with Niantic to those characters kind of to the AR mobile market. If you know the success of Pokemon Go, I mean, it's kind of pie in the sky, kind of a call option type deal, but it's not going to materialize for a few years, but there's a lot of potential there. And I wouldn't really underestimate. Okay, so these theme parks are going to be in Florida, California, Japan, and Singapore. I wouldn't underestimate the power, just like it is with Disney characters, of a family bringing like a 6-year-old kid and going to Super Nintendo World and meeting Mario or Princess Peach and interacting with the characters. Now, that's not going to bring them profits, but it's going to help them solidify the love of the Nintendo characters and getting them to play on the Switch hardware or whatever the second, gen system is. And there's not really any catalyst that'll get people to realize this, except for the possibility of launching a next-gen console soon. They're very secretive. So there's only been rumors that's going to happen, but a lot of people look, and I guess we'll wrap things up. They look at the guidance for this year, and it was lower than last year's results. But it's for 25 million hardware units, 190 million software units.
and it guided down from last year's numbers. However, if you look at last May, we're in the middle of the pandemic. Animal Crossing had already come out, and it's on pace to sell an absurd amount of numbers. Nintendo actually guided for 19 million Switches and 140 million software sales. And what they actually sold were 29 million and 231 million. So this year, they guided up from last year's guidance, but it just looks bad because they are just almost criminally, like, they sandbag guidance just so bad. And there's a few other things here, but I'll wrap things up. I actually have another commitment I have to get to. So if you have any questions, feel free to DM me or anything. I think I hit it. That's a simple pitch there.
Yeah, Brad, thank you so much. I'm sorry that we made you late. Thank you so much for participating, and that was great. I appreciate it, man. Thank you.
Hey, Max.
Yes.
I hate to do the exact same thing, but I messaged you earlier. I do have that commitment that I got to be out by 12:30 if I can talk Activision.
Yeah, I think you're next, actually.
Okay, perfect. And if you or Mark have any comments on Brett's pitch right now, feel free.
Mark? I guess we lost Mark. I'm not sure. Mark, can you hear us? Well, I'm not sure, but I really enjoyed the presentation. Yes.
Hey, Max, it's Zippy. I have a question. Just maybe Brett can help with this. The cash pile Nintendo's sitting on, do they have plans to return that to shareholders? Or I guess one thing that's maybe a Japanese company thing, but I mean it seems like they're consistently hold a large cash balance. Is there any insight you have or could share on that? What their plans are with that?
I could briefly touch on that. So I know Brett kind of hopped off here, but we talk about it frequently. Yeah, there is that obviously huge cash pile, and they have increased their dividend substantially, and they've given out sort of special dividends occasionally when they feel that excess cash is there. But they have the scars of the Wii sort of boom and bust, right? So if you're super aggressive at when things are going well, it can be detrimental. So they try to save some cash and be ultra conservative. I mean, they have an ultra conservative culture just to begin with, but they are starting to deploy some of that cash back to dividends. But they want to save it kind of for a rainy day. And they were, even in the last Q&A, if you read it, they were not opposed to buybacks. They said if it was in sort of the right situation, they would do that.
No, great answer. Yeah, thanks. Very helpful.
Yeah, thanks for the question, Zippy. Has some issues with his mic. So Ryan, if you can go ahead and start your presentation, that would be awesome.
Activision Blizzard, it's probably a company people are more familiar with than some of these other ones. And Luis, if you have anything to, I know you cover the company a lot, and we talk about it between the two of us. So if you want to add anything or counter me, feel free. But the basics of the company, it's a video game holding company, and there's 3 primary operating units. So they have, and they were founded a long time ago, and so they've basically built out these franchises and had a series of mergers and acquisitions that have built this portfolio that they have now. But the first operating unit is Activision, and they're basically just known for making Call of Duty. They have a few other titles, but it's really Call of Duty that drives the revenue for that part. And then they have King Digital, which is that they acquired it in 2016. I want to say for maybe $5.9 billion. And that's just a portfolio of mobile games. So they've got like Candy Crush, those kind of more casual to play games where it's a lot of a la carte sort of in-app transactions. And then they've got Blizzard Entertainment, which that's more, those are the really deep immersive experiences, the ones where your fan base is willing to pay a lot of money. It's stuff like World of Warcraft, Diablo, some of it, I guess, more gory, sort of darker games, but really avid fan bases there. And so I guess over time they've built out this really extensive portfolio of valuable franchises, and it's come through years of development, new iterations, and along this process they've built fan bases. And some of these games, I'm serious, they have like cult-like followings. Like you read, it's like deep in the Reddit threads, and that's where they kind of live, and they love to mingle there. It's it's really kind of interesting to see how avid some of these fans are. But then about 3 years back, I think, was the start of it. They really started to lean in. They wanted to kind of revive their brands. And if you remember Fortnite at the time, like I think everyone thought Fortnite was just going to take wrong, and so uh, they kind of leaned into that model, and they really said, we got to start going where the people are. We got to leverage our brands to meet the consumers where they are today. And so they brought their CFO back, or COO, whoever it was, and he kind of implemented this strategy of where we're going to build for free to play, we're going to build for mobile, we're going to revive our brands. And they had a lot of success with that. And I know maybe some of you have played, maybe not. Call of Duty Warzone was built out of it. And so people really, really love that game. And they've just had tons of success with Call of Duty becoming sort of this cross-platform brand or franchise that it is now. So they've got COD Mobile, which I think crossed 500 million downloads this quarter. They've got Warzone, which is sort of that free-to-play battle royale style, and then they've got the PC and console sort of just purchase versions that you're familiar with. And it's just been they've had tons of success with it, and it's driven a lot of their profits lately. And so Activision as a whole, if you combine all the operating units, they generated nearly $3 billion in free cash flow this year, or the last 12 months. And then Activision Call of Duty really is running at a 50% operating margin. So they've written the script for the value franchises of how to revive them and how to translate them to these other platforms and get consumers to, or get the franchises in the hands of consumers. And they have $6 billion roughly in net cash. They have a small dividend, but it's just that it's small. And so I guess when you look at it, you think like, why aren't they returning why aren't they doing a buyback? That's what EA is doing. It's kind of like the standard in the industry, I guess, for some of these more mature publishers. But they did something that I kind of like. So since COD or Call of Duty sort of wrote that script of how to properly revive a franchise, they're attempting to do it to all their other prominent franchises, or at least most of them. And so instead of just using that money for cash buybacks, or share buybacks, they've committed to the multi-system strategy for these other franchises, and they're planning to hire 2,000 developers within, I think it's the next 2 years, maybe next year, and they're tripling some of the teams of their developers because, and Louise kind of alluded to this, it's one thing to just say like, all right, we're going to take these franchises and we're going to apply them to mobile. We're going to, have some sort of free to play, maybe new iterations with seasons, that kind of thing. It's really hard to do. And you can't, some indie studio couldn't, I don't think indie studios can publish sort of to the extent what Diablo is. Like it is so immersive, and it takes so long. It takes teams. There are serious barriers to entry and barriers to success with that. And so they really benefit from scale in that way. Um, I guess some other notes here. They traded a market cap of $72 billion, but it's like I said, that net cash, it's about $66 billion enterprise value. So that gives them an EV to free cash flow of around 23 times. And they are still growing bookings and revenue at a pretty impressive clip. I think it was 30% year over year this most recent quarter. Obviously, comps are kind of coming around that it's not necessarily certain that growth rate will be sustained. Obviously, it'll probably come down over time, but I think it's kind of a fair valuation. And then the path to growth for some of these other brands is clear. I mean, they've seen success with Call of Duty, and now they can go out and do that. And they're really doing it with Diablo, which is one of the Blizzard franchises. They have, when you're on multiple systems, it brings in a lot of fans that would have never been there. I think Luis also talked about this, where now people can just play on their phones. And so they're doing a Diablo Immortal mobile game, which I think is going to bring a lot more people to the franchise. And then they start to buy, the console or the PC version, and you just make that fan base bigger. And their goal is to hit 1 billion monthly active users long term. I don't know if they put a date on that. Maybe it was 2025. So they're obviously thinking big with that. And then I guess just not to, general tailwinds, like Louise mentioned, I think the industry as a whole is supposed to grow at like 10% a year. The new higher end consoles should bode well for immersive gameplay.
Great job, dude. And thanks for chiming in, Luis. think we're moving on to Andreas with PLTK, PLTK. I don't even know how to say it, man. I have no idea. So take it away for us.
Yeah, thanks, Mark. I think it's pronounced PLTK. So first off, PLTK is a mobile games company. First and foremost, they primarily do casual games and casino games, like casino games. Not for money though, which is quite interesting, and we'll get into that later on. But they IPO'd in January this year, and it was really overshadowed by the IPOs of DoorDash and Airbnb, the general SPAC mania, the GameStop's short squeeze, and just everything that was going on at that point. So I think not a lot of people have noticed it or cared about it. So the stock has kind of just languished a little bit. The initial IPO offering was at $27 a share, and the stock has dipped below that. It's now at 25.20. So, but they have delivered quite good results. So, yeah, I think it's an interesting company to look at, and that's why I chose it. So this is one of the cheapest gaming stocks on the U.S. stock exchange. It's sort of valued like a Chinese gaming company at 10 times forward EBITDA and 20 times PE for 2021. Yeah, and it just plays into the tailwinds of mobile gaming, and especially just the casual gaming and the casino gaming sectors, which I know that Skills is also very big in. So despite just being a $10 billion company, they're actually quite big. They own some of the largest games in the categories. There are social casino games. Now, if you just look at the App Store rankings, they have the 21 most highest grossing game in the US on the App Store. It's called Slotomania. It's a slot machine game. And then they also have the 22nd most grossing game, which is Bingo Blitz, which is a bingo game. So, and the 41, which is just a live poker game, another slot game at 48, and another slot game at 73. So this is really sort of like these low quality, really addictive casino games, but they're really profitable. So I think one of the reasons this stock has sort of gone under the radar as much as this has is because it scores like really low on like the ESG score, which is if you look for environmentally sustainable investments companies, then you kind of also don't really want to deal with companies that partake in gambling and the likes. So I think a lot of managers didn't want to touch this one. There's also another big thing about it, since it's an Israeli company, but it's also majority owned by a Chinese holding company, which then again is owned by some Chinese company called Giant Network Group. So they own 57.32% of the company. But going back to the games portfolio and the recent earnings, the Q1 revenues grew 21% year-over-year, driven completely by organic growth. Adjusted EBITDA was up 39% year-over-year, and they also, similar like as our keynote speaker Luis V. Sanchez described, they employ like the live game strategy where they keep updating their top earners and adding new features to them. And they also do something where they cross-pollinate. That's what their own word for it. And you certain features that are successful in some games and use them in their other games. And this seems like it's quite easy to do since a lot of the games are so similar, like there are multiple slot-based games. And honestly, they look exactly the same, sort of on the GUI front, but while like the themes of the games can be a bit different. But yeah, so Slotomania is a 10-year-old game. It's their largest game per revenue, or second largest. It grew 40% year over year still. Board King, which is a board game, grew 57%. Solitaire Grand Harvest grew 60%. So like people listening to this, they might think I'm talking about skills, but I'm actually, but it's there's a lot of companies in this space, like in the casual casino games, and all the games kind of look the same. So it's a highly competitive sector, and because there's so little differentiation between the games. So that's also a key risk, that the marketing costs might have to rise if they want to keep up the growth. But on the other hand, they have a pretty highly engaged customer base with how much was it? 35 million monthly active users. So yeah, I mean, since it generates so much cash, I think it could be a good buy, especially if the stock keeps going nowhere. Like if it goes to like something like 5 times EBITDA or 8 times EBITDA, I think value investors should definitely look into this one, because even if they stop growing, they'll be generating so much cash that they can start buying back shares aggressively from all their strong earnings. And something to watch for with this game, like this type of company, since all their revenues are through in-app purchases, you can really monitor how well the games are doing on the App Store just by checking App Store intelligence data, such that you can get for free on sites such as sensortower.com, which I use, and App Annie is also another one. But there are many of these data providers. But yeah, and the last thing that's a bit unique about Playtika is that these are all in-app purchases. Like there is no real money involved. You can't cash out your earnings. They say these games are free to play, but it's really an aggressive freemium model. You get a certain amount of credits each day. I don't know, everyone has probably played a freemium mobile game by now, but you get a certain amount of credits, and then you can buy more if you want to keep playing like the slot machine games, for instance. And your winnings can be quite high in digital currency, so you can be earning like millions and feel like you're rich even though you aren't. So I think that's a draw for many people to these kind of games over real money games. And also, you know, they don't have to deal with the same types of regulations as providers of real money games have to deal with. So they're available across both app stores all over the world, pretty much. So yeah, and they seem to be doing really well. At least, I mean, if you look at their app store rankings, it's just I would say they're number one in the category, like hands down. Like they're making in the category, like hands down. Like they're making 5 times as much revenue as Skills, for instance, which is another big player. So and they're so yeah, I think it's sort of a investment, just because they're so profitable. But yeah, that's I would definitely look to pick some up if it becomes really cheap. So yeah, that's what I had.
Yeah, man. Thanks so much, Andreas. I really appreciate your talk. Like Mark said, I have never heard about this company before, but that was a good presentation. I'll probably look further into this one.
Yeah,
thanks,
I mean,
man.
Just one last thing. I looked into it because when you do all this sort of app store research and you want to see what's going on in the sector, you just come across these companies that are ranking really high on the App Store chart, and it was quite noticeable that PLTK had so many really highly grossing casual games. So yeah.
Nice job, Andrea.
Thanks, Mark, for having me. And yeah, that was it.
Good job, man. I think next up, let's just keep it going. We're going to hop right into Zippy. Zippy's going to talk Gravity. I know Gravity was a big winner in 2020. It took quite a drawdown, but it seems like it's starting to level out here. But without further ado, Zippy, go ahead, man.
Thanks, Mark. So if Andreas has a name trading at 10 times forward EBIT, and that's considered one of the cheapest opportunities in the U.S. market, people are going to be excited about Gravity because it's actually trading at about 7.5 EBIT trailing 12 months, and they're growing just as fast, if not faster, than PLTK, and I think their games have a little bit more of a moat. So without going too much on that, I'll just kind of introduce this company just because probably most Americans have not heard of it, but Gravity is a South Korean gaming company, pretty popular on FinTwit among the Scandinavian investors. So really, shout out to them. Some of them on the call right now, I can see. So Mads, Papakino, Value Garp, those guys kind of do a great job following the company. But so I'll go through the history of Gravity and then kind of go into my thesis and then talk about some of the risks because there are some definitely associated with this company. But so Gravity was founded in the early 2000s. Their games are primarily based off of a Korean comic called Ragnarok. So they launched their kind of flagship PC game. It's still around today in 2002 called Ragnarok Online. It's a MMORPG game, and it was actually a super popular game. Worldwide, they hit like 80 million registered accounts, so definitely a big time game. So they obviously IPO'd on the NASDAQ in 2005. So, you know, Coupang gets all the buzz these days, but Gravity was the first Korean company listed in the US. Listed, you know, Ragnarok Online was a few years old, started to decline. They had some corporate governance issues with the CEO diverting company funds into his personal account. So they had to file, deal with lawsuits, and that guy is no longer involved in the company. But basically, the first few years as a public company for Gravity were not pretty. Their PC game was declining. They couldn't kind of come up with another hit game. And basically, in 2014, this was a penny stock. They had to do an 8-for-1 reverse split. So things were not looking good. However, with the shift to mobile gaming, things really turned around. Basically, Gravity, they had tried to, create games, develop games on their own on the mobile side without much success internally. So they kind of outsourced the game development to a Chinese firm called Dream Square. And this Dream Square company basically developed 2 hit games, mobile games for Gravity. And how it works is basically Gravity will give Dream Square the rights to distribute the game in China. Gravity will take the revenues for the rest of the world and get kind of free game development by trading their intellectual property from that Ragnarok comic. So all the Ragnarok games are based off of that IP. And so what happened is they had a hit mobile game and things really started taking off from a top line standpoint. So, I mean, these numbers are pretty staggering. I'll just read them real quick. 2016, they're up 44% top line. Next year, 176, 103%. 2019 was plus 26, and now their trailing 12 months revenue growth is 46%. And then from a profitability and free cash flow, it all followed. Gross margins basically have doubled since 2018. Operating margins have tripled since then. So they generate about 75% of their revenues from mobile. The remaining 25 is that PC with Ragnarok Online, that original game, contributing most of that. And they have some character licensing deals that are a few percentage points. Even though it's a Korean company, GRVY actually generates about half of its revenues from Southeast Asia and Taiwan. So it's really a play on it, to be honest with you. And I'll get into that a little bit. And then some high level numbers just to get everyone grounded. Market cap, 870 million, so under $1 billion. Quite a small company from a valuation standpoint versus some of the other ones that were mentioned in this space. Revenues about just under $400 million US dollars, and they're growing at trailing 12 months, kind of some easy comps. These at least last quarter, their trailing 12-month growth rate is 46%. And then, like I said, EV/EBIT under 8 from a trailing standpoint. So even looking forward 12 months, probably even cheaper than that. A lot of that's driven by a big cash pile they're sitting on, about $170 million. So I think similar to what Ryan said with Nintendo, these games can kind of come and go. So it's most likely they're trying to be conservative with their cash, and if there is a time where they can't kind of keep the train going with the mobile games, they at least have that safety net. So that's a quick intro of the history and the company. Basically, the thesis, I kind of mentioned Southeast Asia. So I think GRVY is really a play on the growth in Southeast Asia. So expanding broadband internet penetration, expanding smartphone penetration. Their GDP per capita is kind of in that sweet spot. It's definitely a big growth region. And so Ragnarok, the intellectual property, most Americans have no idea, what this franchise is. It's not really well known to us. Not like Call of Duty, for example. But in Asia, Ragnarok is really big. And I mentioned their PC game at 80 million users worldwide, right? But I have some examples that kind of just demonstrate how popular this IP is in Asia. They had a crossover event with Free Fire. So most folks are familiar with that. Garena's kind of battle royale game. So, partnering with such a big game just shows you, that C was like, okay, yeah, this IP is valuable and it's worth doing a crossover with them. There was also a concert series in Asia where in different cities like Bangkok and various cities in China where the soundtrack of one of the Ragnarok games was kind of like concert series based on the soundtrack, and tickets sold out within minutes, like thousands of tickets. They filled arena, like medium-sized arenas with this concert series. So I was like, wow, that's pretty interesting. And lastly, they generate 3 to 4% of the revenues each year just from character licensing. So good example of this one in Thailand, like Line Messengers, they're big messaging app. So it's kind of like a WhatsApp equivalent, and you can buy like raggers, and people actually pay for that. So my point is here, it's a very well franchise in Southeast Asia, and now that people have access phones and more internet access, it's a great way to play that trend. Now, in the early 2000s, when GRVY launched their hit PC game, Southeast Asia, the Southeast Asian economies weren't as developed, right? So they kind of, all missed out. The game was real big in probably East Asia, like, Korea and Japan. But now that kind of Southeast Asia is catching up and pipeline games, I'm not going to go into all the details, but they have two games that are their number one App Store and Google Play grossing among all apps in Taiwan. And Taiwan's, I think, like a top 20 mobile gaming market. They have another game that was top 5 in Korea, and they're basically expanding those two games to the new markets, so we know they're proven hit games. And then they have some other brand new games that they haven't introduced yet that look they entered a partnership with the NBA to develop a game to distribute in Asia. I don't, market's not really putting much value to that. They've been working with Tencent on a game to launch in China. They're just waiting for approval on that. Korean games are typically, it's very difficult to get games approved in China for just call it political reasons. But if Tencent's on it, hopefully, they can get that through. There's another Korean gaming company that had a game approved recently in China, and their stock jumped up 25% or so on that news. So I would imagine a similar response from the GRVY stock. So yeah, that's kind of the thesis. It's Southeast Asia, Ragnarok IP, super popular in Asia. They got a good pipeline of hit games. And then there's several kind of call options that, the market's not placing much value on. From a risk standpoint, Mark kind of mentioned this stock can be a little bit of a roller coaster. So, I'm definitely learning to stomach volatility with it. But other than it being a very volatile stock, it's, dependent on the Ragnarok franchise. So, if somehow this no longer is a popular IP, that's definitely gonna impact things. Life cycle of mobile games is short, so gamers are pretty fickle when it comes to mobile games. I think the bigger risk would be that they have a controlling. There's a Japanese company that actually owns 59% of the outstanding shares, so they're kind of the controlling shareholder, and anybody that buys a stock is kind of a minority shareholder. So, they're not going to necessarily prioritize the minority shareholders. So that could lead to some bad decisions for us. And then lastly, capital allocation, it could be a concern, just sitting on about 170 million in cash with no plans to institute a dividend, and not sure what they're doing with the share buybacks, if that's in the works. But if they can't deploy that cash in a way that's creative for shareholders, that could be an issue. So kind of rambled there, but if you want to learn more about this company, just click my bio, and the link in the bio, it should lead you to some articles. And then I also have a Twitter list. With some of the RBLX, with some of the folks on FinTwit that follow the name. Yeah, that's pretty much
that was great. Like I said, we don't get a lot of coverage when it comes to these companies, since it's not a really well-known name. But there's definitely a lot of exciting things about this company, like NBA partnership, or they're like developing mobile games. So really appreciate you coming today and covering this company. Thanks, man.
Yep, thank you.
Nice job, dude.
Yeah, and I think we have 3 more speakers left, and I have a quick announcement to make. Danny, who was going to cover Unity software, unfortunately can't make it. He's running late. So I'm so glad that Brad Freeman was going to step in, but he will cover PENN National Gaming. So I'm looking forward for his presentation. And thanks, Brad, for coming in on such a short notice. Look forward to your presentation.
All right. We
I
have
think-
some more breaking news. Elon Musk sells all of his Bitcoin, and there's panic in the street. It's down like 20% off its highs. Moving on, I think we have Tension Vest talking about, I've never even heard of this name. I'm guessing it's Embrace. Feel free. Go ahead, my man.
Yeah, thanks for having me on tonight. Do you hear me?
Yeah, go ahead.
Great. So yes, it's actually called Embracer Group, and it's obviously almost completely unknown to international investors outside of Sweden, and maybe especially to US investors, since it's mostly a European company, or it has at least been. But yeah, so it's actually one of the most beloved stocks over here in Sweden. On Swedish FinTwitter, it's probably only Evolution Gaming that has gained even more interest over there. But speaking briefly about the history of Embracer Group, it was introduced in November 2016 at a valuation of about 200 million US dollars. And if you fast forward around 4 years to now, it sits at 12 billion US dollars. So that is a 60-fold increase in market cap in a bit over 4 years, which is quite exceptional. And if we speak of shareholder returns, it has generated about 3,000% or 30 times your money if you were lucky enough to buy it in the IPO. But a brief overview of the business of Embracer then. It is a company mostly focused on premium console and PC games, which make up approximately 85% of their revenue going forward. They have over 200 IP in their portfolio. Of course, not all of them, or quite a lot of them, are not commercially viable today, but it's quite nice to have such a big diversification among IP. The company has been on a quite extraordinary M&A spree since their IPO, and today they employ over 7,000 people, which makes them the second biggest company in terms of headcount in Europe, only second to Ubisoft, which actually employs 3 times as many, but only has about 40 or 50% larger revenue going forward. So Embracer of today consists of 8 business divisions under the parent company located here in Sweden, and I will go through those right now. So first off, we have THQ Nordic. It's based in Vienna in Austria, and they are focused on niched AA titles, and also big on making remasters and remakes of older titles. Some of their biggest IP are Darksiders, Breakfast, Remnant from the Ashes, Alone in the Dark, and they also pride themselves on having several Nickelodeon licenses, such as SpongeBob, which saw a release last year that has already sold over 2 million units. Then we have Koch Deep Silver, which is 2 business units in one. First, we have Koch Media, which is a pan-European distributor of physical video games, mostly from Japanese companies such as Square Enix, Sega, and Koei Tecmo. And then we have Deep Silver, which is a developer and publisher in one. Some of their most known IPs are Time Splitters, Saints Row, Dead Island, Kingdom Come Deliverance, and they also have a highly popular license called Metro, which is based on a Russian book series and very big over in Eastern Europe and Russia, of course. And then they've got some other stuff like MotoGP. And thirdly, we have Coffee Stain, which is an indie publisher. They are both a developer and publisher. Some of their own and most noteworthy titles are Satisfactory and Goat Simulator. And then they published a very small indie game called Valheim earlier this year, which went on to sell over 6 million copies in only a few weeks. And it has to be said that this game was developed by literally a couple of people. So the return on investment on that game has been nothing short of phenomenal. And then number 4 is Amplifier Gaming West, which is a sort of incubator that helps very small indie studios with all the financing and boring stuff, so they can focus on just making great games. They usually own studios that don't consist of a few people and also veterans. So number 5 then, which was acquired last year, is Saber Interactive. Development capacity over in St. Petersburg, Russia, which leads to very cost-effective development compared to having studios in expensive areas in the US and Western Europe, for example. So some of their big titles is World War C, which is a co-op zombie shooter similar to Left 4 Dead. Then they have SnowRunner, which is a very niche, what should you call, truck game where you haul large quantities of stuff around the world. And it's very niche, but has even so sold around 2 million copies, I think, since its release last year. And they also pride themselves for being a very prolific work-for-hire company. They have, for example, worked on Halo the Master Chief Collection for Microsoft. They ported The Witcher 3 to the Nintendo Switch, which was quite noteworthy, being a very tech-heavy game, but still making it work on the Switch was nothing short of exceptional. And they are also working on The Witcher 3 ports for the next-gen consoles right now. So number 6 then is Deca Games. It's a mobile games company that buys non-strategic games from bigger mobile publishers and then start monetizing them better and improving their respective communities. And EasyBrain is number 7 and is also a big mobile publisher and developer. They are big on more cerebral games such as Sudoku games and that kind of stuff. They were acquired earlier this year in February, along with the 8th business division, which is Gearbox Entertainment Company, which should probably be somewhat familiar with US gaming investors. They are the creators and IP holders of the Borderlands franchise, which is published by 2K, a subsidiary of Take-Two. They've also got other big IPs such as Brothers in Arms, Homeworld, and Duke Nukem. So what makes Embracer unique then is their focus on decentralizations. The acquired companies get to keep their own identity. They're not rebranded as Embracer New York, Embracer Stockholm, and so forth. It also usually acquires a company that has quite an extensive history. Gearbox, for example, has been around since the mid-90s. So that's over 25 years of history. So why would these companies join Embracer then? Well, it's mostly that they are driven entrepreneurs who want to scale up as fast as possible. And Embracer has an access to quite a large pool of institutional investors, mainly pension funds here in Sweden, but they also got Canada Pension Plan Investment Board on board last fall, I think it was, who invested 3 billion Swedish crowns and have continued to take a larger stake through the direct share issues since then. And they have said that Embracer Group will be the only gaming company for them to focus on, and with their gigantic assets under management, that will probably help Embracer going forward. So this all being said, Embracer is obviously a very diversified company. They now have 68 studios around the world, and they are not unlike other big guys in the US, EA, Activision, and Take-Two. They're not only focusing on AAA games, rather the contrary. They're very big on AA games, which have a much smaller budget, $5 to $10 million. And the return on investment on a successful AA game can be quite nice, as we have seen in the cases of Breakfast, Darksiders, Remnant, for example, and now even smaller games such as Valheim can have an even more exceptional return on investment. So that was an overview of the company and its past and present, so we can speak some of the future as well. So the company just recently took in another 7 billion Swedish crowns. That is around 1 billion US dollars. So now in total they've got 2 billion US dollars in M&A firepower. That is net cash plus credit lines. And then if you take into account that they usually pay with around 50% in Embracer shares when they acquire a company, because they want the sellers to be part of Embracer going forward for a long time. They usually have earnouts that can last up to 20 years for the acquired companies. And as of today, no seller has actually left Embracer, so that should mean that this method is working, at least for now. But it's still a young company, so all kinds of stuff can happen going forward, obviously. But this year, the value of finalized games is set to grow almost fivefold compared to last year. That is including the latest acquisitions, or 3 to 4 times excluding them. And 70 games are set to be released during this fiscal year that ends in March 2022. So speaking some of the valuation then going forward, we have an EV sales multiple of approximately 5.5 and an EV EBITDA multiple of 13-ish. And some of the games that we can look forward to, we have, for example, Biomutant, which is releasing on the 25th of May, and it's trending quite nicely as of now. It was streamed by PewDiePie this night, and has risen to the 4th place on Steam Global Top Sellers. And it's worth noting that that game will be much bigger on consoles than on PC. And then we got other stuff, such as Saints Row 5 is rumored to be out this fiscal year. We will hopefully see some more of that during E3, which is coming up in June. And of course, there are naturally some risks associated with this company. It is still quite young. It has only just short of 5 years being publicly traded. And the business model in and of itself, with all these decentralized studios, 68 now, is completely unprecedented in this industry. The only somewhat similar company being Tencent, that has quite a lot of studios around the world as well, with quite a hands-off approach. And the CEO is almost deified here in Sweden. He's a legend who is celebrated almost everywhere. So if something were to happen to him, that would be quite detrimental to the story part of the company, even though the company wouldn't necessarily implode overnight. And being a company very focused on the M&A, that is also a risk in and of itself. They've acquired quite a lot of companies, some of them with different accounting methods than Embracer, which can lead to that the current figures of Embracer have been, inflated short time, because some of the games that they have been developing and released have been completely depreciated before being acquired by Embracer, which then leads to the profit margins of Embracer being inflated short time. But that will even out over time, so long as they release successful games even going forward. And I am analyzing each game release in and of itself, and I would say that the history so far has been a very nice ROI, especially on the AA projects and the indie projects. And yes, I think that sums it up for now. I hope that you got some more insight into this company that has actually become the biggest gaming company of Europe in terms of market cap, and is closing in rapidly on Take-Two.
Yeah, man, that was great. Thank you so much. Like you said, not a very well-known company among U.S. investors, but I'm sure a lot of people who are on the call right now from Europe especially know a lot about it. So I really appreciate you covering. Like personally, my familiarity with the company goes as far as playing Sudoku. It's pretty interesting. Yeah. So, but after your presentation, I definitely would love to learn more. Maybe you can tell me and all the listeners like some good sources where to go and find a little bit more about this company.
Yeah, so, well, the main source will obviously be the company's site itself. It's got quite a lot of information, and the quarterly reports are also available in English, so that is embracer.com simply. So there's quite a lot to dig into there.
Yeah, I mean, like maybe you've done any of the threads, and like any
Oh,
posts
yeah,
or deep dives.
I had a presentation over at Axe University with Mads, who kind of pushed me towards this show.
Can you tweet that out or no?
Yeah, and then the CEO has been visiting some of the US podcasts as well. I can try to post links to them. They have been quite extensive and very good to listen to.
I'm noticing that every single Swedish company that somebody talks about, the stock never goes down. It's interesting. I mean,
yeah, well, it has been quite volatile historically, and it has been sold off some 20% of its size during this past weeks, like, well, everything else in the tech sector. But
yeah, I appreciate it. Thanks, man, for coming in and
thanks for having me on.
I think for everyone for all the listeners who would like to learn more about this company, I think the guys from Chit Chat Money also just posted a podcast last week about this company, Embracer.
Yeah, that's true. That's true.
Mm-hmm. So you guys can tune in and check their deep dive with Brad, Ryan, and Ian. So that was good. Thanks, man.
Thanks.
Great work. I think we're moving on. Let me see. I have to pull up the. I apologize. I'm guessing it's Anthony. I don't know if I'm right. Am I right?
I think so.
I think we're doing Garena with Anthony. So more C Limited for every single FinTwit fanboy or fangirl out there.
There are so many fanboys, and I'm a huge one of it too. So I know a lot of people are very familiar with C Limited. I think Garena might be the best leg that C Limited has as of today. I think that's almost like indisputable. Definitely want to dive into it and all that it's been doing, and there's a lot of interesting things coming up for it. So I'll just jump right in. So it's their digital entertainment and gaming division. So in a way, the way that the company operates within the other other five business legs, you can almost consider like this one to be the AWS to Amazon, I would say. In their most recent earnings report covering Q4 of 2020, there was incredible growth and adoption of Garena all over the world. Quarterly active users increased 72% year over year to 610 million total users, with about 12 million of those users, or 12% of those users being paid users. And that actually increased from 9%. So that's growing really quickly, 120% year over year for that as well, up to 73.1 million quarterly paying users. So definitely a lot of people are also on the Garena fanboy club, and they don't even have to be on Twitter because I've never even played Free Fire myself. So as a self-developed global hit, Free Fire was the most downloaded mobile game globally for 2020, which is pretty insane considering all the new games that came out, all the different companies that we hear about now that have been crushing it in 2020. Yeah, Free Fire crushed there as well. They maintained this leading position for the second consecutive year, which is absolutely incredible. It's by far the most talked about game when it comes to Garena is Free Fire, and that's for obviously good reason. Some more highlights on how well they're doing around the world. They were the highest grossing mobile game in Latin America and Southeast Asia in 2020, and they maintained that lead already for 6 consecutive quarters. Highest grossing mobile game in India for 2020, over 72 billion views on YouTube in 2020, most viewed mobile-only video game globally on YouTube in 2019 and 2020, and third most viewed of all video games on YouTube in 2020. So that's huge when you consider, you got Call of Duty Warzone, Fortnite, which everyone plays and watches Twitch streamers do. I do that myself too. I love Fortnite. Free Fire esports tournaments hosted in Q4 total over 170 million online in that quarter. So things are getting really, really crazy for that leg of them. And that's not just the only thing they're doing now. They're going to be expanding into new games. And I'll talk about that in a few minutes. What's nice is we can see how they're already faring in 2021, and it's absolutely incredible. So they're the number one in the US for Q1 2021 for mobile battle royale shooters, coming in at 100 million compared to PUBG, which is another massive game all over the country, which was second at 68 million, and then Call of Duty Mobile at 62 million, which is third. But that's also theirs. They do that, and they believe in combination with Activision. and along with FIFA Online 4 and many other games. So Garena Free Fire came in at 8th in the world overall in revenue for Q1 of 2021, and that's according to Sensor Tower, right? We'll see that on their earnings report next week on the 18th, but this is like an independent third-party source that's proving this app data. And they're number 5 for Google Play revenue so far in the world as well for 2021 in that quarter. So you might ask yourself, how does this work, and why is Garena more of a platform than a one-hit wonder, it appears? So they have a very large moat, or whatever that kind of means anymore. To me, this is the moat. Either you're first, you're the smartest, or you're the best, or you cheat. And they're definitely not cheating. They are the ones that are putting this into the hands of people. Cell phones are way more accessible than bank accounts or than laptops, and let alone Xboxes and PS5s, right? So they're hitting it where they can get the biggest TAM market for the most people playing that game. Publishers are not easily able to afford to independently distribute their games, especially in the areas that they're predominantly in, Southeast Asia, of course. And that's already because of the massive and sticky user base C has in those places. And along with that incredible retention and their other different legs of their business, Shopee and C Money, they are pretty much a powerhouse in that region. And so instead of fighting, a lot of distributors join. So C is the one that distributes these games and many others, and they take a cut of that revenue generated in those instances. So they have incredible developer partners, including the mighty Tencent, which owns a ton of C Limited overall, Riot Games, EA Sports, NetEase Games, Nexon, and many more. And the benefit to Garena here is that they get exclusive publishing rights in many instances, and they retain the majority of those gross billings, sometimes in the range of 65 to 80%, which is massive considering like they're already crushing it with just the few games that they have out right now. The main reason that they can command so much value is because of their value add, right? So they do game curation and marketing. They have the integrated payment processing network with C Money, massive captive user base, content localization, localized operations, offline esports events and online streaming, and data analytics. So everything to make your game bigger, better, and faster, pretty much. And I'll talk about their Q4 2020 fundamental highlights. And I took this right off of their earnings report just to share with people, because I know valuations are of the most importance in this market currently. Bookings were $1 billion, up 111% year on year. EBITDA was $663.5 million, up 149% year on year. Adjusted EBITDA represented 65.5% of bookings for the Q4 of 2020 compared to 55.5% for that quarter in 2019. GAAP revenue was $693.4 million, up 71.6% year on year. Average bookings per user was $1.7 US compared to 1.4 for the Q4 of 2019, right? So each person is paying more and more money to C Limited over time, to Garena, which is C Limited. Margins are over 50% here, and their guidance was really, really great for the full year of 2021. They're currently expecting bookings for digital entertainment to be between 4.3 billion and 4.5 billion US dollars. The midpoint of the guidance represents an increase of 38.1% from 2020. So they're definitely not slowing down in the slightest, and it's because they're going to be having these new games coming out. So 2021 and beyond, they have Undawn coming out, which is an immersive open world survival shooter developed by Tencent and Quantum Studios, so that's a heck of a backers there. Fantasy Town, so I know a lot of people are obsessed with Farmville. I've never played it, but I know I've heard about it a ton. So they're building Fantasy Town, which is farming town building mobile game developed by Arum Games, set in an adventure fantasy world. You can grow crops, raise animals for harvesting and selling, take charge of the fantasy town to govern over various magical townsfolk, embark on various adventures and quests, and join guilds where you'll be able to compete with other guilds. So like Farmville mixed with RuneScape and kind of like League of Legends. It's kind of very cool. I might play that. Free Fire expansion is also going to be happening. So instead of trying to make a bunch of new IP, they're going to be launching a new game mode called Pet Rumble, which is a multiplayer social deduction game, kind of like Among Us, which I have never played, but I've seen it be super popular among the younger generation, like friends, younger brothers and sisters I know they're always playing Among Us, and they were doing that for the long time in 2020. And the cool thing about this expansion is that the only connection is the pets from the main game. So it seems to me that Garena is using Free Fire as a platform inside of a platform to test and launch new games. And this could be a possible way to excite these current users so they don't get bored with the current game as it is. Like, Fortnite does new seasons. Let's see what Free Fire does. And this is one of those things I'm looking at. And just to make sure they don't get bored with these without having to do the laborious and very difficult task and cost intensive task of which is basically now their fully virtual edition. Let me really quick. And so in 2021, Garena concluded its first ever fully virtual edition with over 1.2 million attendees. So fans were here treated to an immersive online experience that combined cutting edge technologies with entertaining content to deliver the best of both to the online and offline formats. So they're making a brand community out of this. You know, people are becoming, you know, there's huge Fortnite competitions, huge FIFA competitions, and C Limited is getting all up in that and making their fans excited and wanting to play. And those are the things that really get those YouTube views, that get people online, you know, watching this nonstop. And they're not just stopping heavily on VR, and they recently just created these AI lab. So it's a business like that they just announced in the last quarter, and it'll be increasingly interesting, I think, to see how data analysis from this and engineering is going to augment their reach and improve every aspect of Garena itself, and how much people play and how often they play, and how many of the games that they play in their house or on their phone or whatever devices that they create that can go with those games to make people play them more and make more. And not to mention, I mean, they could do something like an in-house Oculus Rift type device, or, you know, other gaming hardware with the real world in ways that we're unable to today or that are just starting. And I think at the end of it, all of these like indisputable successes from Garena will continue to drive users to their other business legs. Like that's their play. They get people excited on video games, and then they integrate it with you know, C money, and it just all kind of comes together. And that's what I really think this company is very much so like a platform. And I think strategy is not really pay to play, it's play then pay. And I think that's, you know, we've seen that that's been working really, really well for them.
You done?
Yeah,
Nice.
I think I'm good here. I was just making sure I stayed under that 10 minutes.
Yeah, if you got more, go ahead. Whatever.
No, that was
Yeah,
it.
man, go ahead. Absolutely, man. That was amazing. Go.
Thank you. No, that was actually it. I did get through it, and I did not have to gasp for air this time. But I could talk about.
Breathe. I'm kidding.
Yeah,
you did great.
I was doing it and I like messed up and I went 3 as I was doing the podcast. I always do 3, 2, 1, and then we hit another take. But it's funny. I love talking about C Limited. I think it's arguably my favorite company on the market, just because there's so many different things it can get into, and we're seeing it get into so many new things every quarter.
How do you think earnings are going to go?
So the thing about a lot of these tech earnings is people are pricing them regardless of how well their earnings do. Most of the
analyst estimates are like nuts right now.
Right. Yeah. They are pricing a lot of companies very high. And I think that you've seen like things like Etsy and Fiverr like drop down regardless of if they beat or not. And that's just because, you know, it's a repricing of the value and like long-term growth of that company, just because they're giving those lower multiples to them. So I think that, you know, it's hard for me to think that SE is going to not do super well. I think that they'll have great report numerically, but I think the reaction will probably be muted or honestly down, just as a result of what I've seen in so many other tech names that are running along with SC since the beginning of the pandemic.
It's the last man standing right now.
Mm-hmm.
Yeah, man. And speaking of earnings and results, I'm looking forward to seeing what's going to happen. And Anthony's going to join us on Spaces at 6 o'clock on Tuesday to go over the earnings report. It's going to be me, Anthony, Mark, Chris from Value, Parrot Stock, and David from Merlin Capital. So I'm looking forward for this one as well.
I'm very excited. Thanks for having me. It's always a pleasure.
Yeah, thanks for coming. And then last but not least, we have, since Danny couldn't make it, we have Dave Portnoy's little brother, Brad Freeman, talking about PENN Gaming.
Yeah, actually little brother and best friend for life. So thank you for selling me short there. But thank you for having me, Max. I can't really speak on Unity, so I'm going to speak on Penn National Gaming and Barstool Sports, which I can speak intelligently about. But Unity is a cool company, so hopefully Danny can talk about that sometime in the future. But so starting with the sports gambling macro trajectory, so the legalization train has left the station, and that was largely accelerated by the pandemic, really destroying state budgets and making them get a little more creative in fostering new revenue channels without creating new economic headwinds. So cannabis and sports gambling have been the two solutions to that problem we've seen since early 2020, and those are two places I'm invested. So in 2020, what happened is Penn purchased a 36% stake in Barstool to, in my opinion, really change the trajectory of the company. It went from kind of a boring just teetering along brick and mortar regional casino chain to something that could become an entertainment powerhouse in my mind. They have rights to purchase up to 50% at the same valuation in 3 years. And the CEO, Jay Snowden, has already told us they're going to do that and hope to negotiate a larger stake. So what Barstool brings, and this is really important because sports gambling will become more and more commoditized over time, and we're seeing that with all the heavy promotions to try and win market share. But in my view, branding will win. And Barstool Sports has 66 million monthly active users who gamble on sports at a 44% clip weekly. And what that translates into is 29 million weekly gamblers who double as MAUs in the Barstool ecosystem. So that is really the main draw that PENN purchased from Barstool, a giant cult-like following that is extremely relevant for what they're trying to do. And the first project that we are now seeing come to fruition is the Barstool Sportsbook. So it's live in Pennsylvania, Michigan, and Illinois, and it will be live in Indiana this week. They're hoping to be in 10 states by 2022. And the results have been pretty darn reaffirming to what I think of the company. So their handle share, just taking Michigan as a case study, is running at about 13%, and that's it trades out between third and fourth place. But the encouraging part of this to me is that they're gaining this market share without having to spend anything on external marketing, and by spending less than half of the promotions FanDuel and MGM bets are all spending. And what this means, 18% handle market share equals a 20% revenue market share, showing explicitly that they are far more efficient at converting these bets into this regional casino footprint that I also thought was kind of boring before the Barstool acquisition. It also has the appeal so PENN already has gaming licenses in all these states, which makes it a lot easier for them to get the permission and the licensing to run digital sports books. And players like FanDuel that don't have these, and DraftKings that don't have these brick and mortar properties, are finding that they have to partner with other people who do have these assets and who are contributing brick and mortar tax dollars to these state economies in order to be able to participate on the upside of digital gaming. So beyond the digital sports book, there are very strong cross-selling opportunities here within iGaming, and that is not unique to PENN and Barstool. Everyone in the space is aggressively trying to pursue this. So to kind of accelerate this process, PENN recently made 2 acquisitions of game publishers that supply games to Disney and a lot of big players, Microsoft as well, and they're greatly accelerating investments here. So the takeaway from all of this, just from the digital sportsbook and iGaming point of view, is Barstool is winning with brand loyalty, while the remaining competition is winning with heavy promotions and marketing spend. DraftKings will succeed, FanDuel will succeed. They're going to take market share, but to me, I believe that brand loyalty provides a more attractive and more sustainable growth runway. I don't think Barstool is ever going to be number one in market share in any of these, or number one in handle share in terms of bets in any of these markets. But I do think that Barstool is going to have a top 4 market share in every single market while boasting the best unit economics in the group. And just kind of another case study to highlight the clout that Barstool brings and why PENN was so excited to acquire a stake in this company. So on April 4th of this year, the state of Illinois reinstated its on-premise registration requirements for new sports gambling accounts. So essentially, before this, you could go on Barstool Sportsbook or DraftKings or FanDuel, and you could make an account from your couch. And they eliminated that rule, and they gave game operators 36 hours notice. Pretty ridiculous, in my opinion, but it happened, and they had to deal with it. So this led to a full-on sprint for market participants to rack up as many online registrations as possible. And what this translated into is north of 20,000 signups for Barstool, and them slotting in at number 1 in the App Store in Illinois by the end of this time period. So they are really winning by organic word of mouth, and that is because of the 66 million monthly active users that they have built into this gigantic ecosystem. So speaking of that regional casino footprint, I'm going to run over 10 minutes max, but I didn't get a chance to cut it down because I didn't have time. So deal with it.
That's all right, man. Go for it.
All right, I appreciate it. So speaking of regional casino footprint, so regional was key in the pandemic. So PENN's legacy portfolio of properties returned to free cash flow in June of 2020. So just think about that for a second. So participants skewed to the Las Vegas Strip and Macau are still struggling to get to free cash flow, and caters to a drive-to local clientele rather than international fly-to. And I don't have to say why. I don't think I need to say why that's appealing in a global pandemic. Really allowed them to weather the storm of the pandemic while increasing liquidity while bolstering their balance sheet and raising really cheap debt, which shows that creditors were willing to work with them. So encouraging there. And then, so going along with my casino footprint talk, this provides a stable cash cow for Barstool projects, and it also provides a really unique branding opportunity. So another case study at a Greek Town casino in Detroit, shout out Detroit, my home city. So gross gaming revenue, just by putting the logo Barstool on their retail sports book, immediately jumped from 23% to 34%. When you look at Indiana, their two brick and mortar casinos showed the exact same trend. So literally all, and I don't use the word literally lightly, but literally all has to do is put the Barstool name on its brick and mortar properties. And they're seeing things like 25% volume spikes in gaming revenue and 27% volume spikes in table revenue. So it's really helping everywhere. And it doesn't just stop there. So more upside. In terms of podcasts, Barstool has the fourth largest audience in the United States, including 2 of the top 20 podcasts in the United States. So just for context, they slot in right behind the New York Times. They slot in ahead of ESPN and NBC. So I know a lot of you here may not be super familiar with the Barstool brand, but among the younger generations, it is quickly becoming a household ubiquitous name. And I think it really shows there because podcast viewership does skew towards younger generations as well. More plans include standalone entertainment destinations with using the Barstool logo in urban centers. These are essentially, or that's a fancy way of saying they're going to build Barstool nightclubs in New York City and Chicago and all these exciting places. And they're just finishing up with valuation. They trade at 36 times price to earnings and 2.5 times EV, enterprise value to sales. So I see a lot of upside. I see a lot of exciting projects that this company is working on, and there's not a lot of excitement currently baked into the valuation. If this Barstool cult, if this Barstool cloud is as powerful as I think it is, there's a lot of upside here. And if it's not, and I'm overstating it, there's not so much upside here. So it really lies on Barstool. Barstool is the sole reason I'm invested in PENN. I really think that the ticker change eventually will, or I think PENN National Gaming will eventually be called Barstool Sports, but we will see. That is the breakdown, and hopefully that wasn't too long. But thanks for having me, Max.
Yeah, man, that was perfect timing. Thank you so much for jumping in on such short notice. I really appreciate it, Brad.
Happy to.
Yeah, always happy to have you, and really excited to go over Ozone earnings next week. This is going to be fun as well. Mark, do you have anything else to add on Brad's talk?
Yeah, no, that's it. Thanks for coming, everybody. Big day on Tuesday. I think everybody in here probably is long SE. Well, most people at least. So we'll have a good get together at 6 o'clock on Tuesday Eastern time. So see you guys then.
Yeah, absolutely. Thank you guys so much for coming in today. I wanted to say thank you for these amazing presentations to every single speaker that we had today. Please give them a follow. That was really good. And I would like to make an announcement for our next chapter related to financial fitness. Next chapter will be devoted to ed tech industry. We're going to have 10 speakers. Dawal Kachera is going to do the industry overview. And we're going to cover companies like Trade Desk, like Pinterest, like Snapchat, Facebook, Google, Roku, and a lot of others. So stay tuned for the details about this event. Was that, man?
Sorry, that'll be a good one. That'll be exciting. Yeah.
Yeah, I'm really excited about this. So we were on the schedule every other week. But since in 2 weeks we're going to have a Memorial Day weekend, we figured that a lot of people probably be on vacation and drinking beers, hanging out at the pool. So we decided to go ahead and host it the following week. So this chapter 4 EdTech will be on June 6th at 2 p.m.
Cool.
Mark, do you have anything else to add?
Nope. Have a good Sunday for me. That's all.
I know, Wolf, just wanted to say thank you so much for your team for always recording all of our events and providing all the graphics for financial fitness event. So that's big thanks for you.
Our pleasure. Yeah, I was just going to pop up and say that we got this one recorded and we'll be making the graphics for Tuesday shortly.
Awesome, man. I appreciate it. Thank you so much, everyone, for coming in. And we're going to